Good afternoon, everyone, and welcome to this webinar hosted by FPI My Money 123. The Financial Planning Institute of Southern Africa is proud to host this special webinar as part of Financial Planning Week 2025, an annual consumer initiative dedicated to making financial planning the foundation of every South African's life. Financial Planning Week aligns with two global campaigns. World Financial Planning Day, hosted by the Financial Planning Standards Board, the FPSB, and World Investor Week, hosted or led by the International Organization of Securities Commissions, IOSCO. Under the theme, Build an Emergency Fund, your first step to financial freedom, this webinar aims to empower you with valuable knowledge to make informed financial decisions. We also seek to raise awareness of the importance of financial planning and the value of working with a qualified professional to help you achieve your financial goals. Our presenter today is Alex Odendaal from Crew Invest. Having joined the Crew team shortly after completing his BCom degree, Alex quickly became an integral part of the advisory team. As a certified financial planner professional, known for his empathy and exceptional interpersonal skills, he builds deeply meaningful relationships with his clients and takes pride in creating highly bespoke financial plans. Alex's passion for financial planning, combined with his personable approach, enables him to develop insightful strategies that are closely aligned with each client's unique goals. He's a dedicated cyclist who spends countless hours on his bicycle, whether commuting to work or training for his next race. Always ready to lend a hand, Alex is the first to step in when someone needs support. With a caring heart and a generous spirit, he brings warmth and positivity to every interaction. When he's not cycling, he enjoys discovering great food and wine with his wife at cozy restaurants. Alex is all about good vibes, good company, and living life to the fullest, whether on a bike or over a shared meal with loved ones. Thank you, Alex, for sharing your insights with us today. And for the audience, remember to use a financial professional. The link will be posted in the chat for you. And any questions, could you also share that in our chat? Thanks, Alex.
Rihanna, thank you so much for that warm welcome. I don't think I deserve all of that, but thank you so much. It really means a lot. And thank you all to the audience for joining us today. I know it's not been a long week, but it's particularly been a long year. So today's session, I'm going to keep it, more of a soundbite, short and sweet. So we have a little bit more time to ask, there's some really important questions. I really want to engage with you guys a little bit more. And hopefully we can learn a thing or two from each other. So I'm going to start off by sharing my screen with you all, and essentially I want to start off by with you guys with some questions. So if I can ask everyone kindly to please scan the QR code, with your phone. If you're not able to scan or use your camera, please can you just simply search menti.com and then just use the QR and then use that code 776-65948. I'm just going to give you guys just a few seconds to obviously bring that up, and then I'm going to bring up the questions for you. All right. Okay, so I'm just going to go and then onto my side here, onto Menti. Okay. All right. All right, so I think everyone's already started asking the questions already. So sorry, you guys went ahead of me. So essentially, I want to ask you guys some questions. Obviously, the first one being, do you have an emergency fund? Okay, I see some answers being answered. Let me just give a little bit more time here. Okay, I'm glad to see some people already saying they have an emergency fund in place. That's awesome news. And glad to see people also know what emergency fund is as well. So the session's going to be a little bit easier than today. Okay, I'm going to jump on to the next one. Okay, so this one's a little bit open-ended. It can be literally anything, guys. Please take your time on doing this one. So essentially, what are your biggest concerns with an emergency fund? Okay, I might not be enough. That's not enough. I'm always dipping into it, not growing, runs out. Is it enough? Okay, so I'm seeing some obviously similarities around return on investment. Okay, we'll touch on that today. Low growth due to the nature of the risk, trying to find the money to have an emergency fund, keeping it there. Okay, these are very legitimate. Thank you guys for answering these. Let me just give a few more seconds. Liquidity, loss of funds due to poor market performance. Okay. It's difficult to convince households to build it. It's a very good one. A very, very good point. Let me just give you guys just 10 more seconds on this space here. Return on investment. I'm actually really interested to see you guys focus on return. It's interesting. Best mechanism for saving. Okay, what's the best place to put it in? Okay, I really do appreciate you guys answering these questions. I'm going to jump into the last one. What is your magic number for saving? So, I mean, okay, so basically the theme of today, and just to give you guys a little bit more perspective, is that emergency fund, yes, it's a fundamental and serves as a foundation for all future goals and objectives. However, it's very subjective. So please don't feel that the amount you're going to put in is too little or too big. We just need to help you. I'm just going to help you gauge that today. All right. So someone said 150,000 Rand. 20%, maybe they're talking about 20% of their current savings or their salary. Okay, well, 10% of the salary, as much as possible, 25% of the income. What I can afford. I really love that answer. Actually, that actually makes a lot of sense. 1 year salary, 6 times my annual salary. What is left in my salary? I like that. 80,000, 300K. Okay, so I think you guys get the gist of this. So what I'm understanding and what I'm grateful to see is that everyone's not, the same. And saving for any particular goal, specifically about emergency funds, it is subjective, and it does come down to the individual. Okay, so let some people finish off here. We're almost finished with the responses here. 6 times monthly, 10 times my salary. Okay. Guys, thank you so much for taking the time to answer these questions. Gives me a little bit more perspective of who you are. And it's very difficult to do this over online. But thank you so much for taking the time to actually answer these. So if I can bring you guys back to the presentation. So obviously Rihanna already introduced me, which I really deeply appreciate. My name is Alex Odendaal, and I'm going to be talking about all things emergency funds and why they make sense to for everyone. So just going straight into it right now. So why an emergency fund matters, and I think the best way to actually describe it is way from an example. So consider yourself now, you're end of the month now, you've just got paid and you're super excited, you're going to go to the grocery store, you buy all this delicious food, you come back home and you realize your fridge is broken. So now not only that your food might get spoiled, but now the food also inside the actual fridge and the fridge has now gone off. What do? Now, the fridge can cost up to like 7,000 Rand, and now you don't have the necessary savings in order to pay off that fridge or buy or repair that fridge. So you do what any adult would have done. You either then swipe your credit card, and now you get the new fridge. But now you're sitting in a situation now where you have to repay that fridge with interest. Now, if you had an emergency fund in place or some form of savings, you could have paid off that fridge and had it a bit stress-free. So in a similar case with all these other examples, so if you had the right amount of emergency funds available, you would have catered for yourself for a job loss, medical emergency, car repairs, and of course unexpected expense such as a fridge breaking down. So now you ask yourself the question, how much should I save in an emergency fund? And that's why I asked one of the questions at the beginning, because it is subjective, and I'm glad to see a whole bunch of numbers. And I saw a lot of big numbers too. So I don't know if I'm dealing with high rollers here, but it's good to see that everyone is thinking, a big picture in mind. So right there, the thumb there is actually a rule of thumb. It's not a thumb suck number. Okay. So 3 to 6 months of essential living expenses is probably a good way, or at least a parameter to work towards. So when we think about essential living expenses, it's got to do with if you're renting, you got to think about your rent. If you've got a house and you got a bond, you need to think about the bond. Think about the groceries, your medical aid, your essential living. Essentially, what's going to help you to stay alive through that month. If that is too big to quantify, or something that's too difficult to go, geez, I actually don't budget too well, or I don't know what to, quantify that exact amount, what my month looks like, a good way to actually start is by looking at, if you have a car, if you're lucky enough to have a car, you're probably going to have, insurance on that car. And, if you're like me, who was young enough and took out car insurance, was like, oh, no, let me get the cheapest insurance out there with the biggest excess. I mean, who worries about the excess? Trust me. So when you with the bigger excess, obviously it's a lot cheaper, but now you need to fund that excess in order to get the claim. So when we think about the excess being 5,000 to 6,000 Rand, that could be your goal. So your goal is to save as much as possible to get to that 5,000 to 6,000 Rand, because at least that's a tangible goal to work towards. Where compared to the 3 to 6 months of essential living expenses, it could be, a little bit molded up, or you don't know, that number could just continue growing. But at least with something like working towards an excess amount, you know that you can work towards something that's tangible. So now you ask yourself the question, okay, well, what are the steps to help me get there? So I know how much I must put in, but how do I get there? You guys don't realize how important it is just to start. Even as little as between 100 or 300 Rand to 1,000 Rand really does add up every month. As simply as putting, a debit order. So now we're talking about paying yourself first. One way to actually make sure that you're putting that money away is setting up an automated savings. By paying yourself first, putting it away, you're ensuring yourself that you're not spending it in the first place. Then my favorite one is to talk about is the invisible costs. So my goal, or my challenge to you guys after the session, when you go home this evening or this weekend, is to actually download your 3-month bank statement. And I know it's scary, and don't do it over the December time, because obviously that's it's unbiblical time of spending. But if we had to look at our 3 months bank statement, just go through each line item that you didn't account for in your budget. And I'm talking about subscriptions, unplanned meals, and you quickly realize those little costs you add up. And then you can say, well, I can only afford to put away 300 Rand. But if I add up all those subscriptions I don't really use, then my monthly contribution actually increases, and your goal grows quicker, essentially. Now, I think the biggest problem, or the challenge that people get, is that they don't keep the emergency fund separate from what their current account. So you get your salary. Okay, well, I'm going to be dedicated enough to say 10,000 out of my 30,000 I receive, I'm going to leave in my current account. I'll make sure it's my emergency fund. The problem is we do tend to spend what's there. If we can put it into a separate account, we know that that particular account is only used for that particular goal. So you ask yourself the question, where do I keep that emergency fund? And maybe I'm going to spend a little bit more time here, because I realized a whole bunch of you were saying, okay, well, what are your things that are holding you back from an emergency fund? What are your worries? Is that the return of the investment? So that's very interesting, because an emergency fund in the first place, it is there to provide you the access of cash needed to fund that emergency, essentially. So the funds need to be as liquid as possible. And as you know, if you need something, if you need a tangible amount, you saved up to 10,000 Rand, and you know there's an emergency that's clubbed you, and you need 5,000 Rand, you know that you had the 10,000 Rand there available. And that number shouldn't change too drastically unless you're putting in or you're withdrawing out. It mustn't be something that's changing so drastically because it's tied to a specific asset class or investment strategy. So when I talk about that, because the reason I'm harping on this, because I saw a lot of people were talking about return on investment. Again, the goal of an emergency fund is that it needs to be liquid and needs to be accessible. So if we look at a high interest savings account, it's highly liquid, but the return is going to be lower. Then you get what we call a money market account. Yes, it's also is as liquid, but the return is a little bit more moderate. And maybe I can just change you guys' perspective about the return. So yes, if you are saving quite a substantial amount in an emergency fund, considering that maybe your living expenses are much higher than others, and then you need to save quite a substantial amount, completely fine. But I do understand that you're not worried that the money is not growing with inflation. So that is a good concern to have. And that is why maybe considering a money market where at least it grows with inflation, that the power, that your purchasing power is still retained, that you're able to still purchase the same thing today, what it will cost tomorrow. So I do agree on that stance. But when you start looking into things like a fixed deposit, yes, it still gives you a moderate return, but it's highly illiquid. It's locked away. Then you get stocks and equities when you start thinking about, well, at least I get a better return, but it's erratic. Even though it is liquid, it might be going backwards by the time you need to access those funds. So if you had to ask me, it is best to keep it with an account that is separate, something like a high interest savings account or a money market, but it is dependent on your specific needs. So I think, and I know that a lot of people have these similar common mistakes to avoid, and I'm glad that when you picked it up, it was the last point there. But a lot of people feel that an emergency fund or something called savings that we can dip into. And my best example, I had a client, and he mentioned that, look, Alex, I had an emergency fund. I had an emergency. I need to replace all my tires. And I was like, okay, so did you hit a pothole? Did something happen? And then he was like, no, I just knew that within a year I needed to replace my tires. This is wearing down the thread. So in that instance, that is not an emergency. That's a planned expense. And that's where the emergency fund should have been used. So that is something for a specific, goal and objective to save towards, replacing your tires. And that should be kept in a more separate account where emergency is literally there to provide for an emergency, not there to provide for a holiday or shopping. And then the next thing we talk about investing your emergency fund in risky assets. Again, just going back to the returns portion. I know that a lot of people end up putting money in like crypto wallets. Absolutely, crypto is doing incredibly well. However, again, if it's the intention of the asset in the first place, emergency fund is to cater for a specific need, again, going back to the 3 to 6 month essential living expenses. Then after that, you can focus on other goals. Emergency fund should be kept in a very separate, accessible fund that's not going to be exposed to high risk assets. And then, of course, and I'm glad that someone already mentioning, and it's that not replenishing after use. The most important thing is that we mustn't be ashamed about using the emergency fund for emergencies. An emergency fund is actually a great way to help us actually formulate good saving habits, essentially. So if you have a good saving habit of saving that 300 to 1,000 Rand every month, we get our specific goal, but then a month later we end up using it and we deplete it, we still had that same savings goal. We still had the same saving habit. Even after we've reached our goal, what we would have done with that 3 to 1,000 Rand, we would have saved in a different place in the first place. So your habit should still continue, and then once that emergency fund's been used up, we start looking after and replenish it in the first place. So an emergency fund, and I'm aware that this topic is very easy, very, quite simple in the fact that, it's just saving in a place, and if I need an emergency, I need to withdraw it. It's not that simple. It's actually building a foundation for future goals. It's the habit formation that you make for everything else in your life. When we talk about debt repayments, retirement savings, and other investment goals, when you are building an emergency fund, you're not only building a financially stress-free environment for yourself, but you're also making yourself financially independent, not from others, not from banks. You're making yourself, financially independent for you and your particular goals. So that is what it makes it easier once you can get to the part of, repaying your debts properly, saving towards retirement, and then obviously other investment goals. If I can, have a key takeaway today, is to help you guys understand that starting small and consistently is the best way to start. And keeping those funds liquid and separate in a particular money market account is the best way to keep it. And, come down to the individual, building between 3 to 6 months of essential expenses or whatever you believe is essential for you is the best way to guide yourself towards. And again, guys, I just want to reiterate, this is the first step to real financial freedom, because if we do not have that foundation, we can't build everything on top of that. So if I can ask and tell everyone, I want you to empower yourself in the fact that there is so much research, there's so much resources out there, where we use our banking apps. So there's like a savings coach, whether there's, you got to rely on your family members and friends who can ask for advice. But also, very importantly, we want you to understand that you can reach out to a financial professional. They can help you be also accountable for your saving goals. But also, there's a voice of reason to help you understand that maybe, I'm saving but too much. Am I saving too little? And help you guide you through that whole process. So essentially, when we look into a financial planning professional, you want someone that's going to guide you and be your cheerleader, help you to go every step of the way and cheering you on and making sure that you're comfortable, confident, and financially secure in your future. All right. So I know I went through that quite quickly in the sense that I wanted to actually spend a little bit more time on the questions, because I do believe this is where we're going to, engage more, ask we'll be able to understand and learn a lot more, because like I said, emergency funds is quite a simple foundation of financial planning. And I really would like to hear more about you guys. What is holding you back? What is your biggest challenges that you're facing? So I don't know if anyone has asked any questions, Rihanna, but that is me in a wrap.
Thank you, Alec. I don't see a question yet. I see a comment here from Andre. It says, my advice for clients is to have at least 30 to 50,000 in a safe at home for immediate access that is needed immediately, 50,000 in a savings account with your check account for transfers that is needed, and 50,000 in a unit trust account.
Okay. I mean, like I said, emergency funds, it really comes down to the individual, and like that is a great way to start. Making sure that you have access to that cash and different places is also very good. Keeping some funds in a safe, in a unit trust and in a bank account. I mean, it can be a great way to ensure that you have like some form of diversification and accessibility in that case. But it really does come down to the individual and their specific needs. Yeah, but a great comment. Thank you.
So can I ask a question at this point?
Please do.
How does an emergency fund differ from an ordinary savings account?
So it comes down to the intention. So an emergency fund, or maybe just to start off with a savings account. Savings account is there for the particular name, savings. So when we think about all phases of financial planning, you get your short, medium, and long-term goals. So your short-term goals being, let's say, for instance, saving up for a rental deposit. Best place to put it is in the savings account. Then also that short-term goal can also be considered the emergency fund. And that is just a nice financial step to ensure that if anything happens to you, you're not having to run to the bank to ask for cash, or you have to ask for mom and dad or another family member or machinisa, and you get charged a much higher interest rate. So it's really important to understand that there's intention between accounts. So a savings account can also be housed as an emergency fund, but it's the intention behind it. Savings is for a short-term goal, where an emergency fund is literally there to cater for emergencies should they happen.
So if I can make it my own, saving is putting money aside away from my salary to save. But if I'm looking at an emergency fund, it's specific to cover that access that maybe I opted for with my short-term insurance. So if there's an accident, that is my emergency. So it is a specific reason that I'm putting the money away, not just for saving.
Yes. So, like I said, so for me, I'll use myself as a true example. So, I mean, obviously, money is finite. We always make a way to spend it, and we'll figure out ways to how to spend it. But and also, we can't discourage ourselves by saying, look, I know. That's why I started off with the thing about 3 to 6 months essential savings. And it sounds scary when you put it that way. Essential savings can be up to 20,000 Rand. I mean, geez, if you had to save up to 60 every year, you're going to be like, yo, how am I going to get there? That's why starting smaller, what are the things that really concern you? So for me personally, how I actually started off was, I got a car, very fortunate enough, and then I also got car insurance. So when I got the car insurance and I understood what excess was, and I was like, geez, okay, well, I need to make sure I need 5,000 Rand available should anything happen to me. And that was my goal. I reached that goal and I go, okay, well, if anything happens to me, and obviously you need to ensure that you have all the other, parameters and risk cover you have, like income protection, all that. But it's really important to understand what is going to concern you if something really bad happens or something in your house that you can't live without. Again, like a fridge. I mean, we don't think about it, but a fridge really costs a lot of money. And if we don't have it, how are we going to keep our food cool? How are we going to eat? So it's those particular things that you can put a monetary value to, and you go okay, my excess in my car, okay, there's something like a fridge I can look after, and then eventually you get to a point where you go, well, not everything's going to bad happen in that same month, right? Or in the same year, hopefully. So even if your fridge were to back up, I mean, and then you get a car accident, you pay off your excess. You know that essentially, you'll be able to save again to build up to that level. It's not that you have to keep building on top of it to increase that value to a greater amount that you end up not saving for other additional goals. So it's something that comes down to what you're comfortable with, what do you want to make sure that you cover in any event.
Excellent. I see there's a question. I don't know whether you want to tackle that. What is the difference between, and this is about the designations, your CFP, your FSA, and your RFP designation?
I mean, Rihanna, you'll probably be a better person to ask that, but but I guess, I mean, maybe I can explain my experience as a CFP maybe, and then Rihanna, please do add in there. So maybe just to add on my experience is that my parents actually are financial planners. So I grew up actually seeing them, evolve as financial planners, and they got their CFP degree. So for me, it was always the pinnacle point where I wanted to be, and I knew I wanted to become a CFP. Crew Invest gave me the opportunity to become one and evolve into my own person, my own planner. And the CFP designation, and essentially the CFP designation helped us to almost distinguish ourselves between other planners, not to be like, oh, I'm a CFP, but it's more to show that you're a professional in your own right. And that's where we stand on, and we want to make sure that the highest form of professionalism we can give to our clients and for myself. So for me, that's what the CFP stands for. It's to make sure that I'm doing the best I can for my clients, and that I studied hard enough to get to that point and worked hard enough to get to that point as well. But Rihanna, please jump in, because I think it's better stuff coming from someone actually from the FPI.
All right. So to answer that question, the FBI has got different designations. So your CFP, your FSA, so your Certified Financial Planner, your Financial Services Advisor, and then your Registered Financial Practitioner. That is the different levels of competence that you obtain through your education component. So in order to get your RFP designation, you have to have at least a NQF level 5 qualification, which is your wealth management. Your FSA is your 6 to 7 level qualification, and then your postgraduate diploma of financial planning is an on NQF level 8. In essence, it is linked to your experience as well as your competence levels. And it depends if you're looking for somebody that can do a basic financial plan for you, you might be able to use somebody that's got an RFP designation. But remember, our members also have got years and years of experience behind them. So you might find a person which has got an RFP professional designation, but they've got years of practical experience in the industry. So I hope I've answered that. And if we can then move on to the next question that we have. How do we handle having perhaps a few consecutive emergencies and those funds being depleted, especially with emergency accounts that have smaller amounts?
Oh, that's a very good question. Alexis, thank you so much for that. So when it comes down to obviously consecutive emergencies, that is quite difficult, and obviously if you don't have the ability to save as much as you can, obviously with the finite money you have every month, and obviously you've got a budget, then that's when you go down towards, okay, well, if I'm going to be able to have to go into debt, so for instance, have to borrow from the bank, then you need to look at your budget before you even go into that emergency. So maybe rephrasing this is that I've been in a position where I had to borrow money from the bank because I didn't have the necessary funds available. I looked and I obviously borrowed immediately, and then I re-looked at my budget and I said to myself, okay, well, what is there that I can forego that's kind of a want, and I can ensure that I can deplete that expense or deplete that interest that I had to borrow from the bank. Once you've reached that goal, right, then you're able to go like, okay, well, I'm already used to paying this interest. I'm already used to paying, this interest, the interest and the repayment back. So maybe I'll continue doing that in an emergency fund, and hopefully that, consecutive emergencies don't come out again. But it is very difficult, and it is understanding that these things are available to us, like debt, borrowing from a family member, but it's more to do with it's not about the number. It's not about, okay, well, I didn't have in the first place. It's all about the intention. So if you have the intention and the habit formation of saving enough, saving consecutively, you will be able to be in a position where if consecutive emergencies were to happen, you should be fine. And it shouldn't be, and we mustn't feel embarrassed or feel we're not in a position or financially independent if we're not able to do so. You are building towards that. So again, with smaller amounts, it's always best to start saving now consecutively, and eventually it will grow over time. So hopefully it answers that question, but it's a very good one. Thank you very much, Alexis.
Can I add to that, Alex?
Yes, please.
Find a financial professional to assist you with taking control of that situation and helping you to do the planning for those emergencies. And I have again posted the link in the chat. Okay, so Alexis is saying, so it's about building the habit of setting an amount aside in any case, especially with a mindset that it is for emergency.
Absolutely.
Yeah.
Absolutely. I think but that also works, and this is why it's the foundation, emergency savings. It's because you have the exact same mindset for everything else that you do. So even if then you're tackling on debt repayments, saving for retirement, all other goals, that habit that you form for building up your emergency fund will then continue going on for the rest of your financial planning journey.
Excellent. Thank you. Alex, so another question. What psychological benefits have you experienced or observed from having an emergency fund?
Sure. That's a good one. Do you know the psychological benefit? Okay, well, maybe the downfall of not having one, and then I'll talk about the benefit, is that the downfall of not having an emergency fund is that often I've had clients who, and I'm actually going to speak to Niku's question there about, using the two-pot system, for the emergency fund, is that we end up in a position of we feeling, we haven't achieved a goal. We've now got in a position where we have to borrow funds from ourselves. Specifically, we talk about the two-pot system. We say we're taking money away from our retirement fund, or you have to borrow money. You already put yourself on the back foot. And then you just, geez, I could have just done better if I had just put that emergency funding in place. But it's almost I don't like toxic positivity, but you kind of need to reverse that psychology and look at it the exact same way if you had an emergency fund in the first place and going, well, I'm in this position now. How do I get out of it? It's going to be the exact same way you would have if you had an emergency fund in the first place. Consistently saving, building a fund that's particular for that particular goal, and then you'll eventually get yourself out of there and you start building from there. So psychologically, if you had the emergency fund, of course, then you're going to feel a lot better. You're going to feel happy to know that you've achieved a certain goal, and that also just builds on for future financial planning goals. Again, guys, it's all about habit forming. And as Rihanna mentioned, I think it's really important to have, a financial planning professional that it's going to help you be accountable for your goals. It's kind of having, for me personally, obviously being my own financial planner, I've got a whole incredible team of people that I can lean on. But I think the biggest person I can lean on is my spouse, Candace. And she always makes sure that I'm, achieving my particular goals because I voice them to her. And she goes, Alex, have we done this? Have we done that? Have you done this? Why are you not achieving that? You need someone that's going to be not shouting at you, not someone that's not putting you in a position where you're feeling, oh, I didn't reach it. It's more about someone going, come on. You got a cheerleader behind you, be accountable for you and help you to get there. So, being open with your goals, having someone and of course, financial planning and financial management and obviously money, it's a very sensitive topic. So speaking to a financial planning professional not only gives you the accountability, but also, someone that's independent from your family and friends. So we're not there to judge. We are there to only advise and provide you, the goals and help you to reach those goals and objectives objectively, essentially. So if you need someone like that, we do recommend seeing a financial planning professional.
Alec, just to reconnect with Nico's question here. The latest argument is that your savings from your two-pot is your emergency. Should we really be using that money that we can draw from the two-pot as an emergency fund? Because ultimately that is money that is being put aside for your retirement. Am I?
Absolutely. No, look, it's such a difficult topic. And I grew up in the Eastern Cape. So I've seen a lot of people that have struggled, and they didn't know the education where, they're putting money into an RA and they thought it was a place for them to withdraw at some point in time until they realized they could only withdraw until they're 55. So I do believe it's a step forward for people to know that, for the greater masses, it's a good idea that people are having to access it. But I think where we miss the mark is the education behind it, where we need to understand that it's not there just to be used because of the sake of using it. It is there to cater for the absolute emergency. You literally have nothing in place, but in our practice, in our clients, and when I speak to friends and family, the two-pot system is essentially still the same thing prior to when two-pot system came into place. It's only there to be accessed when you need to retire. And it should be used, and again, I'm talking back to the intention. So the intention, when we talk about retirement, for retirement, emergency fund. So I think that's where, the two-pot system is a great, implementation to provide for people in financial stress, just like what happened in COVID. But it needs to have a better name. And we need to educate the masses more. And that starts that it literally needs to be there for the absolute emergency. But we need to ensure that people are well informed of their decisions. Should they be in the position they need to access it? Okay, but here's the drawback of doing so. And how do we, what if you had to do an alternative? So again, I think, what's really important is that it's a great conversation starter. It's a nice point of contact with clients, and it's a nice way to engage and help them to reaffirm the idea why we have a retirement fund in the first place. So, we can argue, two-pot system, it's a terrible idea, but it's actually forcing us to do proper planning for people.
Perfect. A question here from Sepo. Is a fixed deposit appropriate for an emergency fund? And linked to that, that is a CFSA appropriate for an emergency fund?
Okay, so maybe to answer off Sepo's question, the fixed deposit. So A fixed deposit is more, I would say, we were talking about short-term goals. So the short-term goal being a savings goal. So we were talking about savings account. A fixed deposit is a great way to save a particular goal, knowing that you're only going to need it in a very short space of time. Say, for instance, like for me, saving towards a wedding, I knew that I was going to get married in a year's time, and I knew that at that point in time, I needed to pay for a deposit for catering. For instance, I knew I needed to save that amount and I had X amount, but I didn't want it to be subjected to a poor return. Don't want to just save in my savings account. I knew I needed it in a year's time. So I go like, okay, what if I got a better return? Maybe I can, splurge a bit. Maybe I get an extra dessert. So I put into a fixed deposit I could access in a year's time. But again, there's the intention. There was a particular savings goal. If you were to put your emergency fund in a fixed deposit, you remember you're subjecting yourself to, it's fixed for a period of time, whether that's a 1 month, 3 month, or 6 month, or 12 month. The bank will probably give you the money back if you had to access it. However, there'll be heavy penalties at that point in time. So not only that you're accessing that particular investment for the wrong reason, you're also losing money out because of the penalties you got in with it. Similar case with a TFSA, there's no penalties per se if you had to withdraw funds. But you also reduce that lifetime contribution over your lifetime. So you're only able to contribute up to 500,000 Rand in your lifetime, and you're only able to invest 36,000 Rand per year. So I always like to start off with this question. If you had to maximize your tax-free to get to 500,000, how long do you need how long will it take? Simple maths, it's going to take you at least 14 years. And if you had to ask anyone, what are you going to do in 14 years' time? You're going to be like, I don't know. Like, what do you mean? That's a long time. So a tax-free investment is there for the long term. So it's a long-term investment. It shouldn't be used for anything that's short-term per se. I wouldn't say a tax-free investment shouldn't be used anything less than 10 years, because the nature of the investment is there to build for discretionary tax efficiently, and the only way we actually see the tax growth substantially is after 10 years, specifically the way how you invest it. But also you can only see the fruition or the gain of it, of the beauty of a tax-free after 10 years. So again, emergency fund and tax-free, the intention, tax-free, easy accessible. Short-term, tax-free, long-term, yes, it's accessible, but it shouldn't be. So I hope that answers that question.
Thank you, Alex. I don't see any other questions. Is there anybody that still have a question that you would like to just post in the chat for us and we can look at that? On my side, it's silent, Alec.
Yeah.
Do you want to give us your final thoughts and yeah.
Okay, Sam, thank you. Yeah, I just want to say thank you everyone so much for taking the time this afternoon. Like I said, it's not been a particularly long week, but it's been a long year. And when we are going into the festive season, that's also a short-term savings goal. You want to enjoy yourself, and financial planning is not about killing yourself over saving towards a particular goal event in your year, like retirement. It's also about enjoying yourself in the now. And how you do that by giving yourself the financial freedom of doing that is setting up a good budget, saving for particular goals, and how do we achieve them. And again, a financial planner is a great person to go to and ask them, is this achievable? How do I get there? Because your lifestyle needs to determine the particular investment and return that you need, not the other way around. You want to work towards something that's going to be beneficial for you and your family, and make sure that you're going to be happy at the end of the day. So it literally just starts by saving towards an emergency fund. And I really hope you guys have a fantastic afternoon and week. And then if I don't see any of you, I really hope you guys have a wonderful rest of the year.
Thank you, Alec, and thank you to everybody that joined us this afternoon. I hope you found it very insightful. Please join us tomorrow for our session on wills, and then there's our last session on Thursday. We hope to see you there. Thank you so much, everyone. Goodbye.